Good morning, everyone. Welcome to the Vetiva breakfast meeting brought to you by Vetiva Capital in partnership with Frontier Africa Reports. My name is Victoria Ijugu, and I'll be moderating today's session. On our agenda for today, we'll get an analysis of the recently released inflation reports by the NBS from our economist, Ibuku Omoyemi. Following that, we'll hear from our capital markets analyst. And we also have joining us today our partners from IC Securities Ghana, who will be giving us coverage of the Ghanaian markets. We will then round up with headlines from African markets by our media partners at Frontier Africa Report. We would like everyone to note that this meeting is being recorded and may be shared with third parties. Also, the meeting is being streamed live on our Vetiva online Facebook page, if you'd prefer to view from that platform. Finally, during the course of the 30-minute session, you may send in questions using any of the chat functions available on Zoom or Facebook. However, at the end of the session, we would have a Q&A segment, and if you prefer to speak, you may use the raise hand function and you'll be called upon to speak. So we'll now be starting with the inflation analysis by our economist, Ibuku Omoyemi. Good morning, Ibuku.
Good morning, Victoria, and good morning to everyone. So yesterday we witnessed the release of the report. While it came as a positive surprise that inflation fell from 18.12% in April to 17.93% in May. We actually attribute this surprising result to high base effect, as prices are not rising as fast as it did during the pandemic, given the fact that we have seen reopening of the economy, reopening of the borders, and economic activities gradually reopening. This could be a possible reason for the moderation in inflation. When it comes to food, we saw that food inflation was a major driver because it also moderated from 22.72% in April to 22.28% in May. And we also attribute this to the high base effect, as this is actually easing pressure on food prices. But we also discovered that imported food inflation, which captures the segment of food inflation which is subject to FX pressures, is still rising, and it rose to 16.97%. So we believe the gap between 16.97% and 22% is probably caused by the agricultural headwinds which we have seen. So because of various interventions by the CBN, as well as the high base effect, yes, we attribute this moderation to that factor. So moving on to core inflation, in line with our expectations, core inflation rose. It even surpassed as it rose to 13.15% in May from 12.74% in April. And we actually attribute this to FX pressures, as well as the low base effect from the reduction of PMS prices in April 2020. So we believe this was what drove core inflation beyond 13%. However, we noted that there were marginal declines in health and energy inflation. What this means is that health and energy inflation is not rising, health and energy prices are not rising as fast as they used to. And this could be attributed to the waning pandemic pressures, as well as flat PMS prices this year. So our outlook for inflation is that we expect a higher month-on-month print due to the FX pressures, but we actually expect the high base effect to overwhelm the FX pressure. So we expect another moderation in headline inflation to 17.8%. So moving on to food inflation, we note that although there is a shock, there's a looming shock from the decision of the Onion Producers and Market Association of Nigeria to actually stop the supply of onions to the southern region of the country, because we believe that this shock is not broad-based, and we believe that there will be intervention to curb this shock. So we actually expect food inflation to moderate to 21.8% in June. With regards to core inflation, we see the FX weakness. Looking at the fact that in the parallel market, the Naira is now around 500 Naira to the dollar. So we expect that weakness to drive core inflation higher to 13.36% in June. So that sums it up for our expectations for inflation. Over to you, Victoria.
Thank you very much, Ibukun. We'll now move to Shion, who will be giving us updates from global equities markets. Good morning, Shion.
Yeah, good morning, Victoria, and good morning, everyone. Like Victoria mentioned, we'll be doing a roundup of some markets in West Africa, precisely the Ghana stock, the BRVM, as well as the Nigerian Stock Exchange. So we start off in BRVM, where the index sustained previous days on positive close. We saw a 13 basis point gain in that market. Activity level declined on the day as both volume and value that were traded ended the session lower. I think we've guided towards these. We guided towards this in our previous analysis of the market. Market breadth in that market also closed flat. We saw 14 gainers and losers, 14 gainers and 14 losers in the session, where 41 counters traded on the day. The likes of Totals, we saw Total Senegal, we also saw Safka, like we've also previously mentioned, all lifting the market to that positive 13 basis point close. Looking at the sectoral performances, we saw all the sectors closing higher, save for the BRVM distribution sector, which closed 39 basis point lower. Year-to-date return also improved to 10.16%, following the gain recorded in yesterday's session. The sentiment largely for the index is still positive. I will believe we'll see these positive pattern flowing into today's session. We will continue to look out for winning names in that market, that's in the BRVM, and update our listeners accordingly. I think we've seen in couple of weeks, there are a few names which we've also continued to mention to be some of the gainers in that market, like the likes of Safka. We mentioned Nestle, and we've also mentioned CFAO Motors as some of the names that we consider as winners. And if things change, or if we see any other winner in the market, we'll also bring this up to our listeners. So moving to Nigeria, we saw another red close in the market, coming from the last time the market traded, which was on Friday, where we saw a marginal loss. The index declined 166 basis points in yesterday's session, to start the week on a negative note. Airtel Africa was the major contributor to this loss, as the share price of the telecommunication company declined 10% to close 753 naira on a very small volume. What we noticed in particular to that to the name, which is Airtel, was just over 120,000 moved the stock lower, that 10%. Also, being one of the most capitalized stocks in the market, the impact of the loss was quite significant. Okomu Oil was also another major loser in the session, closing 944 basis point lower as well. So those were some of the major names that pulled the market to that 166 basis point loss that we experienced yesterday. Though we saw gains in some of the banking names, like Access and Zenith, as investors continue to cherry pick some names in this sector. These gains pushed the banking sector to a positive close of about 16 basis points, but this unfortunately couldn't lift the market to a green close. MTN and Unilever, we also noticed, were some other gainers in the session yesterday. Like we mentioned in our expectation for that yesterday session, activity level was maintained. We saw around above 2 billion level to close at 3.6 billion naira, while the volume traded also improved marginally by 3%. Looking at the performance of the sector, consumer goods sector ended the session lower, as we saw, which followed the decline in names like Dangote Sugar and International Breweries, while the banking and oil and gas sector closed higher in yesterday's session. Largely, what we noticed in yesterday's session was a couple of cross trades. We saw cross trades around in Zenith, and we saw some in Axis Bank as well. So what we've noticed that in the market, and we believe markets should continue to see such large cross trades. So for our expectation for today, we expect market to return to positive close, as we do not see any other, as we do not expect any high cap stocks, as we don't expect any high cap name closing at their intraday low. So we don't expect market to close lower today. Investors will also be on the lookout for the result of the NTB auction to see if there will be any major movement away from the consensus across the different maturities. So we'll look out for that as well. Then we believe turnover will likely remain elevated in the session while investors continue to cherry pick on sound names. So that'll be it for the equities market. Thank you very much.
Thank you very much, Seun. We'll now have our partners from IC Securities Ghana who will give us updates on the Ghanaian capital markets. Good morning, Johnson.
Hello, good morning. On the Ghana Stock Exchange, the exchange tumbled further for the second time this week on the back of profit-taking activities in MTN Ghana. Renewed selling pressures in the telco giants outstripped available demand, occasioning a 4 pesos decline to 1 cedi 20 pesos. Total Ghana inched up a peso to close at 3 cedis 41 pesos, with block demand mounting in anticipation of supply. Consequently, the composite index lost 46.87 points to return 36.39% on a year-to-date basis. For today's session, we take profit-taking activities to persist in MTN Ghana with a chance of the stock declining further. We also anticipate block bids in FML, Total, and EGL to continue to mount as buyers entice sellers with aggressive pricing. Thank you.
Hi, good morning, Victoria, and good morning, everyone. I'll start off with the Treasury bill space. Government of Ghana exceeded its target at the regular primary auction for 91-day, 182-day, and 364-day bills, as it raised 1.34 billion Ghana cedis last week. The yield of the 91-day bill dropped by 7 basis points to 12.64% from the preceding auction, while that of the 182-day bill remained relatively stable at 13.42%. The 364-day bill also dropped by a whopping 15 basis points to 16.34%. This could be attributed to constant drop in yields in the bond secondary market. On the local currency bond market, the market was fairly active yesterday following the issuance calendar release and the 7-year bond auction announcement last Friday. We believe that participants have retreated to look out for information around the initial pricing guidance for the auction, which is expected to be announced today. We think the initial pricing guidance would come in the range of 17.5% and 18.1%, given that yields are playing along those levels on the secondary market. In terms of trading, 2026, 2032, and 2039 maturities dominated activity on the day, trading at an average yield of 18.05, 19.25, and 19.50% respectively. Some activity was also observed around March 2024 maturity, which dealt around 16.6%. We expect a calmer session today as participants await the initial pricing guidance. On the Eurobond space, the US bond market again lost steam yesterday as investors await a policy decision from the Fed. Investors are in a holding pattern ahead of the Fed's policy decision as they await clues about when the central bank will slow the pace of emergency asset purchases. Other things to look out for are updated projections for interest rates and economic forecasts. The 10-year US Treasury yield continued to linger around 1.50% from its 3-month low on Thursday last week, amid the biggest slide since December. The sub-Saharan African market remained sluggish for the most of the sessions of the day. Ghana was no exception, as the front end and the belly of the curve again lost some points as it traded downwards between 0.125 and 0.25 percentage points. The back end of the curve, however, also traded downwards between 0.25 and 0.375 percentage points on the day. That's all for fixed income. Thank you very much.
Thank you very much, Daniel. Next, we'll have Omorige, who will give us an update from the fixed income markets. Good morning, Omorige.
Good morning, Victoria. Good morning, everybody. I'll be taking an update of the Nigerian fixed income market activities for yesterday. I'll start with the money market. Despite the OMO repayment of about 46 billion that came in yesterday, there was a significant decline in system opening figures. Our system opened 44.89 billion positive from the 192.21 billion positive that was recorded on Friday. In spite of the decline in system opening figures recorded yesterday, interbank rate eased by over 700 basis points to trade around 15% levels from the 22% levels it traded on Friday. The easing of rates was largely due to the lack of any major funding need in the market yesterday. We expect the money market to trade at similar levels today, barring any change to status quo. Moving on to the Nigerian FS market, the parallel market lost about 3 naira yesterday to trade at 505 naira to $1, while the earning window traded at 420.97 naira to $1, closing at 411.75 naira to $1. That's a 95 kobo depreciation from where it closed on Friday. And this happened despite the significant increase in earning industry turnover as it increased by 85.6% to close at $172.24 million from the $92.78 million recorded on Friday. We believe that Naira will continue to hover around these levels in the absence of any major policy adjustment by the regulator. Moving on to the Nigerian Treasury Bills market. The T-bills market opened the week to a lukewarm trading session. However, we witnessed some interest on the long end of the NTB curve, especially the newly issued one-year paper, that's the June 9, 2022. However, as investors, we are not keen at buying as bids levels were around 9.5%, despite offers being at sub 9.3% levels. The lack of aggressive bids in the market yesterday was largely due to the NTB auction that is happening today, as players would rather feed their bids at the auction at 9.5% levels and above than feed them in the secondary market at sub 9.5% levels. There were some trades consummated on the newly issued special NTB at around 9% levels. OMO maturities of about 46 billion that came in yesterday spurred some buy-side interest on the mid to long end of the OMO curve, with trades majorly consummated on the December 2021, February 2022, and March 2022 maturities. At the NTB auction today, the DMO is offering about 14.85 billion across the 3 usual tenors. On the 91 days, the total amount on offer on that end is 2.53 billion. Our expectation is that the marginal rate will maintain at 2.5%. For the 182 days, the total amount on offer is 1.7 billion. We also expect the marginal rate on that end to maintain, while on the 364 days, the total amount on offer on that end is 10.61 billion. Our expectation is that the marginal rate will close between 9.5% to 9.64%. Given the meager amount on offer, about 10 billion that is on offer on the long end, we believe that investors will bid aggressively to stand a chance of getting their full allotment. Hence, the marginal rate on the one-year paper should close lower today. However, the propensity of the DMO to borrow more than they usually have on offer should provide a buffer against the decline in the marginal rate. So generally, we expect that the market will trade on a very quiet note today as the NTB auction takes center stage. I'll conclude with the Nigerian bonds market. The bonds market traded on a quiet note yesterday as players focused on the release of the inflation data by the Nigerian Bureau of Statistics. We saw some buy-side interest on the mid to long end of the benchmark curve, particularly on the 2034, 2035, 2036, 2049, the 2050 maturities, with few trades consummated across those securities. The most sought after maturity in yesterday's trading session was the 2049 maturity. Bids on that end were around 13.85%, but most offers were hovering around 13.7% levels. However, some trades were consummated on that end at 13.8%. Overall, average benchmark rate declined by about 2 basis points to close at 13.25%. Our expectation for today is that we'll see a moderation of rate in the bonds market as players react to the release of the lower inflation data. That concludes it for fixed income. Thank you very much.
Thank you very much, Omorige. We will now conclude with updates on African markets from our media partners, Frontier Africa Report. Good morning, Temple.
Right, good morning. So quickly, we'll look at what's going on across the African markets, the major blocks across the continent. Uganda insurance sector has just released the data for 2020, and that shows that they grew by some 9.34% in 2020. It's an increase from 974 billion shillings in 2019 to 974 million shillings, 974 billion shillings actually, to 1.065 trillion shillings in gross premium written for 2020. And life insurance business, we understand, is a major contributor by over 17%. Non-life grew by 6.9%. Ethiopia has got its telecom sector up in the news again. They are looking for foreign investors to take minority stake in Ethio Telecom, as much as 40% to be sold out to a minority stakeholder there. But there's a 1-month window that has been offered for the tender, and the government is expected to retain some 55% stake in the company, while Ethiopian investors will probably hold on to 5%. Analysts do expect an IPO to hold for that to be actualized. Tanzanian President Suluhu Hassan is also in the news. She's asking her central bank and other financial actors to brace up for cryptocurrency adoption. According to her, crypto and blockchain are basically dawning, and Tanzania cannot afford to be left out of that space. We understand that yesterday MTN has been sending out messages to some folks across the country, and it's basically to warn ahead of service disruption in some parts of Nigeria over insecurity, because basically we know that they've got sites across in the woods, and these are sites that actually serve some parts of the country. So it's saying that given the insecurity level and the risk that is facing the country across the northern part of, generally across the country, as the reports from Reuters put it, it's saying that their technical team may not be able to access the sites to rectify faults. World Bank is waiting for the National Assembly to reveal Nigeria's spending plans for the approved $6 billion loan. AFDB has also just floated a 600 million Australian dollar 5.5-year kangaroo bond. We know that AFDB in recent time has been floating more of social bonds, but this Australian dollar bond, which is like the largest since the largest issued by the bank rather since 2018. This is going to be the fifth currency in which the AFDB has been floating currencies. And South Africa's building industry confidence is up 39 points. The agribusiness sector in that country too, agribusiness mood, the index is also very positive. And in northern part of Africa, analysts are expecting the Bank Al Maghrib to hold rates at 1.5% for their MPC, the monetary policy rates that will be coming up either today or tomorrow. So when they will have their briefing. These are some of the headlines we've got to share with you this morning. Thank you for listening.
Thank you very much, Temple. We have now come to the Q&A segment. If you have any questions, you may use the raise hand function so that we can unmute you and you may speak. But if you prefer not to speak, you can use the chat box and type in your questions and then they'll be read out and answered. Also, if you're joining us from Facebook, you can use the comment section to type in your questions and they'll be read out and answered. Thank you. Okay, looks like we have a question. It says, what does the current inflation trajectory portend for the yield trajectory? Okay, so I'll throw this to our fixed income analyst.
Okay, good morning, and thank you for the question to me. So there are two ways to look at this thing. Inflation is trending downwards, but from what Ibukun also noted, there are possible FX translatory implications in the near term. Nonetheless, we have also had auctions where borrowers have shown good appetite for yields also at these levels, whilst we've seen the DMO basically sell aggressively, more or less like front-running their borrowing request, knowing fully well, again, it's the government and they are aware that the sums they need to borrow is probably going to keep growing. So when you look at all those concerns, you start to question the yield trajectory in the near term. We have noted over time as well that in July, we have about 800 billion coming into the system from bond maturities and also coupon inflows amongst other credits. So again, that's on pressure point for yields between now and July. So our view generally is that the upside for yields remains limited at this point in time, unless again we see CBN coming in to try and attract foreign investment by increasing yields on almost securities. That hasn't happened for the first half of the within the last quarter, and the chances that that would happen between now and July or August remains very slim. So we see where yields maybe maintain for the next couple of months, and depending on how strong the impact of FX is on inflation, we can start to see the pressure points towards the ending of Q3, Q4 for a possible, uptick again in yields. But in the near term, our view is that yields will most likely maintain, but in July, we'll see things drop a bit again. Secondary market yields are toned down from where we were about a month ago, basically on the back of the fact that buy-side players have been trying to pick up yields ahead of maturities coming in July. Also looking at the fact that auctions have been well oversubscribed, oversold, and still yields have been, the auctions have been strong. And so all these factors, we sum up together and maintain a view that in the near term, yields will probably maintain with a slight pressure to push things down in July. In August, we might tick up slightly to where we are currently, but further down before we see a strong push up again, like we've seen the last couple of months. That will be towards the end of Q3 and Q4, depending on the translationary impact of FX into inflation and how the central bank reacts to managing FX. I believe that covers the question. Thank you.
Thank you very much, Dapo. We have now come to the end of today's session. On behalf of Vetiva Capital and our media partners, we thank you today for joining us, and we hope that we see you tomorrow. Good morning.